Welcome to the fourth webinar in Insurance Europe's Cover Notes. I'm delighted to be here with Patrick de Cambourg, the newly appointed chair of the Sustainability Reporting Board of EFRAG, the European Financial Reporting Advisory Group. Patrick has had an impressive career, first as an auditor leading to the position of honorary president of the Mazars Group, and then as president of the French Accounting Standard Setting Authority, the ANC. He has been involved with EFRAG for some time as a member of the Financial Reporting Board and also chairing the EFRAG Project Task Force on preparatory work for the EU Sustainability Reporting Standards. Patrick, first of all, congratulations on your recent appointment.
Thank you, Olav.
Do you help us understand why did you choose to apply for this position?
Well, as a former auditor in my prior positions, I realized, of course, that everything was not captured by financial reporting. So in my former position, I sponsored the production of a number of books on how to cope with the hidden capital, and also the risks that were not taken into account. So that's point one. Then point two, when I became chair of the public agency in France that is responsible for accounting standard setting, I realized that sustainability, at that time we were saying non-financial, defining something but what it is not, which I think is a bit negative. So we're moving to sustainability, which is a lot better. But I realized that it was emerging. So I was telling the minister I work with, saying, look, there is something happening here. 20 years ago, I felt it would be coming quickly. It didn't. But now it's mature. It's coming. So at the moment in time, our ministers have, he said to me, well, why don't you provide me an analysis of the state of play and provide recommendations. That was end of 2018 and 2019. So I produced a report where I realized that it was clear that what we call today sustainability reporting would become the second pillar, the second leg of standardized corporate reporting. So I said this to him. I shared this with the Commission, and they said, that's exactly what we think, because we are launching a number of initiatives in sustainable finance, but without data, we will not succeed. So that's the beginning of the story. And then, naturally, after having shared the project task force, it was, of course, a natural evolution to say maybe I could share the sustainability reporting.
So, in fact, a very long-standing interest and involvement in sustainability reporting. But you've also been very involved in financial reporting standards. And now with the non-financial or sustainability reporting, are there very big differences in how you develop standards and how that shapes the work?
Well, I think that the starting point is that you need to have a look at what is in sustainability reporting, which is not in financial reporting. Financial reporting is focusing on own operations, the consolidation approach. When sustainability reporting expects undertakings, businesses, to go to the full value chain, upstream and downstream. So this is a key difference, quite frankly, to start with. The other key difference is that when financial reporting is focusing on retrospective information, forward-looking information, targets are a key element of sustainability reporting. So those two factors are the key differentiations between the two pillars, or the two legs of reporting. That being said, I personally think that it's absolutely important that the two legs walk in coordination, unison, under the control of the governance, creating the right connectivity. Without connectivity, we would be lost. So this is why, by the way, having the two pillars under one organization at EFRAG or under the IFRS Foundation is a good idea to create the right connections and to make sure that we avoid gaps or overlaps in corporate reporting.
And how does sustainability reporting fit into the bigger sustainability picture? How will it help towards Europe's climate neutral and wider sustainability goals? And how much impact do you think these reporting standards can have?
In my report to the French minister, I was saying you cannot achieve policy goals or strategic goals for businesses without appropriate data. So for me, creating an environment of quality sustainability-related data is a key element, a link in a chain for succeeding in the ambitions all businesses are confronted with. So I would simplify by saying no public policy, no private strategy can be successful without proper data. So that's where standard setting has to play a part. Of course, standard setting is not everything. You have to implement under the leadership of the governance. Auditors have to play a part, and then enforcers have to have a look. And of course, other stakeholders that review all this and say, okay, this is quality data we can work from.
I think from the insurance industry, we can certainly agree that data is core, and this data in particular. And a few days ago, in fact on the 22nd, EFRAG submitted their advice to the European Commission on the European Sustainability Reporting Standards. The scope of those standards is extremely ambitious, as was the timetable to deliver them. What were the key challenges in achieving this?
Well, challenges, we tend to consider that it's true that the timetable was a key challenge. But it's also fair to mention that we started the journey 34 months ago, when in September 2020, at the request of the Commission, under the umbrella of the European lab at EFRAG, we created the task force, phase 1 on preparatory work and phase 2 of the elaboration of exposure drafts. We knew that we had to move to the institutional phase by the creation of the Sustainability Reporting Board and also with the technical expert group. And that took place early 2022. And we, passed the baton to the new organization from the PTF to the new organization. We knew that the exposure drafts were a bit too ambitious. So the challenge was to of course, comply with the deadline that had been given to us by the CSRD. So it's a legal deadline. It's not because, it's not arbitrary. It's because there is urgency. We knew also that we had to strike the right balance between the ambition to cover, a reasonable depth of information and the feasibility and the capabilities of businesses to meet the goal. Because it's, even if we reduced, and by the way, the work that has been done on the basis of the public consultation is to reduce by approximately 45% the volume of information that will be required. And this is good because without, of course, creating a big problem for the core of the substance that we need, we created something that is more acceptable, because let's not ignore the fact that it's even if the step is a little lower, it remains a significant step. It's a game-changing step. We are on a journey to create a second pillar of substance on an equal footing with financial reporting. This is no detail in the evolution of corporate reporting. This is certainly key. And as a consequence, we need to be proportionate and establish the right steps, because we are on a journey and there will be other steps towards the maturity of sustainability reporting. Normally, in financial reporting, it took decades to get to a level of maturity. So we are trying to get to maturity in a shorter period of time, which is maybe the key challenge.
I think what's particularly impressive is that it covers ESG, the environment, social and governance aspect. And I know that was something the CSRD requires, but it's also something that you were very determined to do.
Well, we said it in our preparatory work. I mean, it's very, for me, for us, and the CSRD is absolutely in line, or we are in line with the CSRD rather. You can't discuss environmental matters without addressing the social matters. And certainly governance is a key element of the whole thing. So I think that when the expression ESG was coined, I think it was for good reasons. And therefore, because there are so many interactions between the three elements, planet, people, and the governance to organize the whole thing and the interactions, it's absolutely key. So that we feel that it's a good system. Maybe it's a bit too ambitious, or maybe it's ambitious, but it's also addressing the real problems.
But as it's clear that this was a very challenging very challenging task, and there were concerns raised over the stresses that this put on maintaining EFRAG's aim for very strong due processes, but also on those involved, the EFRAG staff, volunteers, and those who contribute to the technical expert group and the sustainability reporting board. How can this be addressed going forward?
Well, first of all, I would like to pay tribute to what has been done. You know, when we started the journey back in September 2020, I mean, the resources were not very clear, but you know, there was such a momentum in the EU that EFRAG has been able to stimulate contributions in a way that was allowing for what has been done. So I think it's very key. Efforts were coming from all over the place, with a lot of enthusiasm and a lot of dedication. Okay, that was, I would say, project mode. Mm-hmm. Now we need to move to and we are moving today to institutional mode. And in that respect, because, you know, asking efforts from people, individuals that are either employees of EFRAG, staff members of EFRAG, or contributions in kind, volunteers coming from many horizons. And by the way, we wanted to respect the multi-stakeholder composition of EFRAG because that's very important. And we did. So yes, that is not sustainable long term. We will keep contributions in kind, but the bulk should be in the hands of permanent staff. And also the level of involvement should be in line with a proper work-life balance. If not, we would not respect E, but certainly S and possibly G.
Yeah. And what is your assessment of the final advice that EFRAG was able to deliver?
Well, I think that from what I hear, I'm careful, of course, because it's very, very fresh. But I think that the outcome is a balanced outcome. As I said, we had 4 objectives. Objective number 1 was to align with the final CSRD, because remember, the exposure drafts were prepared on the basis of the proposal, and the discussions led to modifications. So we onboarded the modifications. Point 2, from the public consultation, we received a message that it was too deep, too burdensome. So we have performed an exercise of reducing the number of disclosures, as I said, by about 45%, but without impairing the substance. 3, we certainly wanted to have a second look at standards that had been prepared by working groups with differences in terminology. We had to create more consistency. So that has been done, and simplified by the same token. And 4, we wanted to take stock of the other initiatives that are operating in this very important space, namely Global Reporting Initiative and the ISSB. Bearing in mind that for the ISSB, they were themselves building their own, standards and capacity and system. So to the maximum extent possible, we have tried to create the interoperability to avoid something that was a key request from the public public consultation, please, no double reporting or multiple reporting, even worse.
Well, the insurance industry certainly sees this as an impressive achievement. The data that these standards will provide is crucial for our ambitions on sustainability and climate change. But this advice is actually the first of a set of wider requirements laid out by the Corporate Sustainability Reporting Directive, CSRD. Now looking ahead, what's next?
So what's next? The CSRD has a clear roadmap. Well, first of all, let me mention the fact that on set 1, which was delivered by EFRAG on November 22nd, the Commission has still work to do. They have their own process to go to the delegated acts stage. So they have to consult with the public authorities in the EU. They have to organize a public consultation. They have to translate in the top 24 languages of the Union. And they have to finalize that by the end of June. So, and of course, we will assist them, but they hold the pen and they have the final responsibility. We are technical advisor, they are the lawmakers or the regulation makers. So that being said, we of course are working on the next sets of, and the next set, so we will have a strategic discussion at board level before Christmas, but already steps have been taken. So I can tell you that what we are working on, first of all, we have to consider the sector-specific dimension or layer of standards that is expected following the CSRD. So we have identified a number of sectors on which we are already working. We will have a staggered approach because we can't do everything. We have a sector classification of about 41 sectors, starting from the NACE codes. We didn't want too small, we didn't want too big. You know, NACE classifications is certainly you can go to a 4-digit classification, but it would be too granular. So we have identified 41, take or leave one. And so we intend to have that over, I would say, 3 years or so. So we have a first batch that we will discuss with our board how many sectors we'll cover in the first batch, which will follow by 1 year, deliver in November 2023. That's point one, sector specific layer. Point two, we have the SME, listed SMEs to cope with, I mean, to provide standards for those, so those undertakings. And by the same token, we feel that it would be important to have a voluntary disclosure system for non-listed SMEs, which are not in the scope of the CSRD, which are of course confronted with transitions and also with their relationships with the large entities and the listed SMEs, and therefore should have an opportunity to join the train, if I may say so, in order to reach destination and transitions in an appropriate manner. So that's it. We have a number of points that we want. We said that we didn't want to take a rushed decision for sector agnostic, and the first one is the question related to the value chain of financial institutions. So we are going to start relatively soon, I think, first of all, we took a commitment that we would consider at this point, and by the same token, we should consider also the sector-specific disclosures that could be expected from financial market participants.
Okay, I think that the insurance industry is happy to hear that there will be a focus on the value chain. That's certainly one area we think needs some further clarification. And in terms of the other sector-specific work, that will continue until when?
Well, resources, also capacity for the market to absorb so much. So we want to be neither too fast or too slow. So let's say that we may consider possibly 3 batches for to cover the 40 sectors.
Okay, so 2 more years.
Yeah, after the current one.
After 2023.
Well, that's a guess at this stage. We need more precise planning. It's not a commitment.
Okay, understood. You mentioned the interaction with the international, the International Accounting Standards Board work, and we know there is an ambition and indeed a requirement under the CSRD to take account of such standards, and in order to achieve, I think the term has been used, interoperability. So maybe you could explain what is meant by interoperability, and how much progress has been made on this already, and how do you see that developing going forward?
So, 2 fronts, if I may. The relationship with the ISSB and the relationship with GRI. So, as regards the ISSB, we have had over many months now a regular dialogue with first TRWG, which was the former working group that was created, and then with the ISSB as soon as Emmanuel Faber became chair, and then in 2022. The outcome of that is the idea of having interoperability. From an EU perspective, we feel that whoever would be complying with ESRS should also be considered as applying ISSB standards on climate. Today, as you know, we are covering, as you mentioned, E, S, and G, and in E we have 5 standards, in S we have 4, in G we have 1, so we have 10 topical standards. So at the moment, our goal is to make sure that businesses in the EU, in the scope of the CSRD, would not have to report under ESRS for climate, and then also on the basis of ISSB standards. So at the moment, our assessment is that we are there, because we at least, their goal, I think the goal of the ISSB is to get to a vote sometime in February. Of course, they are still deliberating, but we have followed their work, we have exchanged views. They might take on board certain of our suggestions. The idea is that whoever is complying with the SRS would be complying with the SSB to avoid double reporting. And I think we assess it is the case, and we think it's achievable. And as regards GRI, specializing on impact reporting, we have made serious efforts in cooperation with GRI from the time of the PTF, Project Task Force, to make sure that we were compatible with them in terms of materiality assessment, but also in terms of disclosures. So I think that the businesses in Europe that have adopted GRI will not find themselves lost in the ESRS world.
Well, I think certainly the interoperability is a name the insurance industry shares. So.
By the way, they made a statement. I don't know if you read it, but GRI made a statement to that effect just after the release, the issuance of our technical advice.
Now, apart from the challenge that EFRAG has to continue to deliver the standards required by the CSRD, there's a challenge for the companies, 50,000 or so companies, to implement the processes to report on the standards. When do you envisage that everything will be really up and running and all this data that we need so much and are looking forward to get will be available for insurers and everyone else?
So it's a compromise between a realistic timetable and what would be needed in an ideal world. So you know that the CSRD is giving us guidance regarding who is implementing what and when. So, as you know, the former NFRD preparers will have to report on financial year 2024, issuing the report as a separate section of the management report, which we call the sustainability statements, to have the other leg as compared to financial statements. So that they will have to release that at the same time as the financial statements and the management report, of course, because it's part of it, early 2025. So that's the NFRD ones. Then you have the other large, so the smaller large. And by the way, large in the EU is not so large, as you know, because the three criteria, and two of them are sufficient to qualify, are 40 million turnover, 20 million total balance sheet, and 250 employees or more. So it's not, when by international standards, when we speak outside the EU, when we say large, we always explain that large is on the basis of those criteria, because it's not considered necessarily as large elsewhere. But under that definition, the other large, the non-NFRD ones, will have to report on 2025, early 2026. And the listed SMEs 1 year later, with an opt-out clause. So they have the possibility to say, I'm not ready, or I have difficulties, on the basis of an explanation, they can opt out and say, I would like to defer by 2 years. And the voluntary ones, the voluntary standards to be adopted on a voluntary basis by the other SMEs, of course, it would be, I hope personally, that we are able to address transitions on the basis of the economy as a whole. I think it would be in the interest of course, the EU, but more pragmatically, it would be in the interest of the SMEs. Because, it's always the same story. If you are not in line with the developments around you, you probably reduce your own creation of value, your relationships, you are perceived as lagging behind, etc. So I hope the virtuous circle will operate.
So do we, and we're certainly looking forward to having this data. But Patrick, thank you very much for taking part in this cover note.
My pleasure.